Good afternoon, everyone. I'm Florence from the Institute of Banking and Finance, and we're delighted that you're able to join us this afternoon for this IBF Masterclass, jointly organized with ISACA's Singapore's chapter on cloud adoption for FIs, security and regulatory compliance. We're glad to have with us today Nicholas Charlson, Director of Cloud Security Solutions at Microsoft, who will share a case study on a global cloud migration program before he participates in the panel discussion with two other subject matter experts, Arun Vivek Iyer, Executive Director and Head of Cloud and Container Security, Engineering and Architecture from Standard Chartered Bank, and Edwin Teo, Head of Governance and Regulatory Affairs from OCBC. They will discuss on cloud adoption in Singapore's FIs and talk a little bit about the MAS guidelines. The discussion will be moderated by Niraj Maskara, Lead Partner for Digital and Emerging Technology from Ernst & Young, from EY. Before I invite them to share their insights, for those of you who may be unfamiliar with IBF, allow me to do a very brief intro on the IBF and the resources we have to help professionals in the financial industry. The IBF was established by the MAS in 1974 as a training provider to provide functional training for the financial industry. Since then, our role has evolved into one of standard setting for financial services sector's skills and competencies. In August 2018, our mandate was expanded to cover career advisory and job matching function for the financial services sector. We were also appointed as the Jobs Development Partner for the financial services sector last year by the Jobs Development Council, and now oversee both jobs and skills development for the financial industry. Here's a quick look at our services and how we support the industry across training, recruitment, and workforce transformation. You can find out more about our services and connect with us on any of these areas via our website. Now, since last year, we have also put in place enhanced training support for the financial industry to alleviate training costs during this period. The enhanced course fee subsidies are part of MAS's support package that was announced in April last year to sustain and strengthen capabilities in the Singapore financial services and fintech sectors amid the current economic downturn. The aim of the enhanced training support is to encourage more companies to send their employees for training and upskilling so that they are in a better position to help the company move forward when economic activity normalizes. Enhanced funding support, which was to expire by end of this year, has now been extended. Training costs under IBF recognized programs will be at 90% from the 1st of July to 31st of December this year. This will go down to 80% for trainees below 40, while remaining at 90% for trainees above 40 for the first 6 months of 2022. It will then go down to pre-crisis levels after that. To encourage companies to continue sending their staff for training allowance will also be extended for company-sponsored trainees till June next year. You can find more details on the enhanced training support on our website. You can also find a list of eligible training programs on the IBF Program Finder on our website. In addition, the IBF will also be supplementing the commercial training available with free webinars like this one during this period to support the training needs of the industry. Financial professionals can also tap on the Learn at IBF mobile learning app for bite-sized learning at your own leisure. All these complimentary training are accorded with non-core CPD hours. And that concludes my short intro. I'll now hand the time over to Karen, Director of Marketing from ISACA, who will kick off this afternoon's session. Over to you, Karen.
Thank you. Good afternoon, everyone. I just wanted to drop in and say thank you very much for joining this session. If we move on to the next slide, please, Florence. Right. Just as a very quick overview, we have just done the introductions from IBF. We will go into the next part of the webinar, which is a sharing by Nicholas from Microsoft on his experience working with the FI sector in cloud adoption. Right after that, we will be then starting the panel to further explore cloud adoption in the FI sector, and you'll see that we have got a very exciting group of panelists today to share their insights. If we move on to the next slide, I'm not going to spend too much time introducing them, as they will get the chance to introduce themselves to you. With that, we will move on to handing over the mic to Nicholas, and he will begin his sharing session. Thank you very much.
There we go. With the sound should be better now. Okay, can we move to the next slide now? And the one after that. Okay, hello everyone. So quick intro about myself. So I've been in the industry for quite a while in Singapore for the past 6 years, where I was actually on the client side, so working for insurances and banks, trying to introduce essentially ventures, so new projects, innovations as part of their journey, and all of that actually in the cloud. So that's what I'm going to talk about as part of the case study today. I joined Microsoft 3 months ago now to lead their cybersecurity architect team as part of APAC. And my background is in technology, as CIO and CTO before joining the banks and the FSI industry. Next slide, so we can get into it. All right, so ventures. So when I was in the financial industry, so in the banks and insurance in the past 6 years, my key role was tech venture builder. So what it means is essentially you create new ventures, so could be new pilot, new prototype within the actual bank or the insurance. In hindsight, now that I can look back, this is really a great way to start your cloud adoption journey. You start from a concept and then you build progressively to production pilot, where everything that is required for it, so security requirements and so on, as a project incubated for large regulated organization. So it's a really good learning journey. You definitely, again, acquire a lot of information and skills as part of the process, and you get to actually base yourself into going into it. The journey for me, and the specific example I'm going to talk about, but usually the journey is between 3 to 6 months. So in 3 to 6 months, depending mostly on what we call the data rating, so the type of customer data you store, depending on how sensitive and secret it is, might take a bit more time because it will require a few more round of certification and security checks. But usually the last one, for example, I worked in, took actually 6 months, from being an internal prototype to actually going live as an application in the cloud on Azure for hundreds of users for the bank worldwide, with a significant data rating as well. So some personal information as well were involved as part of the process. And we had to be compliant, obviously, with MAS TRM, with PDPA, 655, but as well, and I will talk about it, even more regulations such as GDPR and so on, which I think is quite important. So that's what I worked on. One of the key focus as part of my journey going to the cloud is really the work I've been doing, working with risk, security, and compliance team, and IT team, obviously, but these are the ones that as an IT or developer or CTO, we are not spending so much time on. And it really taught me to really show empathy. I really had to understand the existing processes, why they were there. I had to understand everybody's role within all these teams and their incentives, most importantly. Then, once I understood how things were set up in the company, I had to understand the guidelines that were pushed by the country I was from, as well as the market I will be delivering the application. So, as I said, MAS, GDPR, and so on. But talking very quickly about guidelines, the fact is actually when you are working for an international bank that has an HQ overseas, the guidelines they have internally in terms of security and compliance and risk are actually usually stricter than the one that would be proposed or enforced by the regulator in your country. So that's something to keep in mind as well. We had to go really the extra mile to make sure we would be compliant, not for the sake of complying with Singapore. Then for each of these requirements, we had to go through each of the regulatory requirements, each of the recommendation and guidelines, and try to map that to an internal control. So within the bank or the insurance, you have a list of controls. And we wanted to make sure that each of the points that we had to follow as part of obviously being regulated by a country was mapped with an internal control. And again, the good thing is because we had a phased approach in building pilots as we were growing progressively, at each stage, we were actually adding more and more requirement as the risk was growing. So we had the time really to catch on. So for example, there is no point doing pen test if you're just running a simple landing page if you want to measure interest of your customer. But as you grow bigger, then that's going to be required. When you come to that larger stage where it's really a more serious pilot stage, then you have to look at the different parameters of your project. You have to look at the data type that you're storing. You have to look at the number of users. You have to look at the support process. You have to look at the SLA. And all these different pieces of information will usually generate a score on each key dimension. And based on this score, then you have a list of control you have to comply with internally, which will make sure we actually comply as well externally to all the guidelines. So, and then you go through the list, and that was the interesting part, is this list is not meant for the cloud. So you go through the list. Sometimes it's actually quite easier to implement the controls, because when you're on-prem, again, it's quite hard, but when you outsource it to your cloud provider, a lot of the controls are de facto actually compliant. Some you have to adapt as well, because for some of the application, in our case, we decided to do as much as possible with a PaaS solution or SaaS solution, so software as a service or platform as a service, rather than IS. So because running VMs and so on comes with a lot of processes and workflows that you have to follow. So we try to stay more at a high level where part of the service was managed by the cloud provider, which really eased off the load. So that's an important aspect. Another aspect that I can share as well were the challenges we faced, and there was a long list, definitely. There was significant time pressure when you're running a venture. It's like running a startup in a way. So you want to make sure every month, usually every month and a half, you actually show progress, you show how you're doing, you show customer is interested, the customer base is growing, and so on and so forth. And because of that, and because of the velocity that was required, we decided not to connect to the core on-premises identity services. That was the one from the bank. Same thing for the support process. We didn't follow the official one, and we didn't follow as well the monitoring solution, because just the integration to those services just would have taken too much time. So we had to set up our own identity in the cloud and processes and monitoring and support model to be, again, to have greater velocity, but that came with more risk and obviously more problems, because we wouldn't comply to the controls that would de facto be fine if we were to use the bank on-prem solution. But to mitigate, again, these controls, we try to use the best practices and the standards that were offered by the cloud provider. And again, we really went for off-the-shelf managed service solutions. So we were sure that we could actually offload the risk and really trust the cloud provider. So we wouldn't have to go through all the customization and essentially maintenance of all these different settings. So that was a key challenge. The other challenge, and I'm sure everybody, that's going to sound familiar to everyone, to avoid lock-in by cloud provider, most of the financial institutions want to start the journey with multi-cloud. So they want to be on AWS, on Google, and on Azure, for example. That means that you, from the get-go, you start with a really complex infrastructure, and that's going to create some delay as well. So that was a challenge for us. We had to say that essentially we could not quite do that, because usually if you want to be multi-cloud and being able to move workloads between the clouds, you have to build a project usually on containers, or Kubernetes, or things like that, because it's much easier to move around. But again, you have to do a balance, because when you create something with containers, it's great, but it comes with a certain level of complexity. And when you run the pilot in early stage, this complexity sometimes it's going to slow you down. So we had to essentially avoid being compatible with multi-cloud, focus on one cloud, delivering for that cloud. And as we scaled up, then we looked again back at container and solutions like that, as the team as well of developer and technologies was growing. Another challenge was, or let's say challenges, the quick discussion about compliance. So there was essentially an approach of securing the platform by complying to essentially what we had to comply with. I personally think that compliance does not mean being secure anymore. It used to be the case, it's not anymore. Most of the recent breaches that you can read in the press were all done on companies that were compliant. So now that we move to other frameworks such as Zero Trust and so on, you don't want your platform to only be secure yearly or bi-yearly as you go through the audit process. And then you get the stamps, because in between the audits, then you drift and essentially the platform becomes uncompliant in a way. So the one of the challenge was really to change this mindset from we have a snapshot and we are secure to really having a regular and a holistic approach to security. So you want to encompass the whole development cycle as well as the dev, test, and the production environment. And any security need should be assessed across the entire supply chain every time something changes to make sure what would be the repercussions so that you can really be secure end to end. And that was quite hard, not to implement that, but to actually change the mindset of the teams we were working with, who were really used to this, again, stamping the audit is passed and now you're good to go. On the benefit side, so obviously many controls, as I said, are easier and faster to implement when you are in the cloud. You have all DevOps processes that are integrated, you have policies, you have governance, you can get all the logs in one place, it's much easier to report. It's much easier as well to do role segregation, which is very important when you work in a regulated industry. So not that you have the super admin that can just do everything anywhere. And that's much easier to do in the cloud and much easier to audit as well by the team that are responsible for it. And the way I look at it is, in a way, it's easier to assign ownership when you work in the cloud, I found, versus when you actually work on-prem, where you will have layers and layers and layers of teams that are responsible for some pieces of it. And when something goes wrong, you don't quite know who should be in charge. Once in the cloud, I felt it was much simpler as well to assign ownership for each of the steps. Another benefit that I found was the fact that you can leverage the cloud provider certification. So there's a lot of question about making sure you are SOC 2 compliant and so on. And that's something as part of the shared responsibility model with the cloud provider that you can essentially offload to the cloud provider, especially when you work with a PaaS or SaaS solution. Then the one that everybody knows, the benefit is really scalability. As your project grows, you can actually easily scale up. And more importantly, when you're a venture, is the cost aspect. So you really get predictable and transparent cost. So you can really do a good forecast as to how your costs are going to be doing as you onboard new users, how you enter new markets. And that's really something that I found was really helpful being on the venture building side. Other last points is on the security assessment, and I think I touched base on it. You really get to see now in real time how you are doing from a security standpoint and from a regulatory compliance standpoint. So on Azure, for example, I use the security center, I get a score, and I know how I comply with NIST or CIS or PCI DSS or many other standards as well. So it's very easy for me to see, and I can actually go every week and see how I'm doing, because maybe I did a few servers and think I forgot, or then I can go back and say, okay, the score slipped, I have to essentially fix a few things. Then you go back to a really good security level. And that's much easier to do as well, because the provider is doing all the work to map each of the server and communication and process as part of DevOps as well into this compliance score. Which comes down to the agility and the time to market. Obviously, that gives you a greater time to market. You can create value for your customer much faster. You can get feedback from your customer and as well shift the focus to something else, a different feature much faster, while managing your cost as best as you can. And finally, the one that I found actually quite interesting and that is becoming really critical, especially in Singapore, is that this is another very important benefit is the talent retention. So as you work more and more on cloud adoption products and solution, you really get the team involved. People are seeing, obviously, everybody knows that cloud is the future. I don't think I have to convince anyone there. But being part of this project and this initiative, having a say, getting some training, even if they're not part of the team, but at least collaborating, that really helps as well for the talent to upskill and stay within the company, as well as actually acquiring talent as well, because now you're seen as a company who is really looking forward and trying to be differentiated by solutions that are running in the cloud. I think that's 12 minutes. That's everything I had to say on this slide, challenge benefits. Yeah. So
all right.
back to
Thank
you.
you very much, Nicholas. All right, so if we move on to the next slide, we now enter the section of the panel discussion. I will then invite Neeraj, who is your moderator for the panel discussion, to start off introductions and diving into the questions.
Thank you, Karen. Good afternoon, everyone. Let me start by first saying a big thank you to IBF and ISACA for having me moderate and facilitate this session. Obviously, a very exciting topic, and very eager to invite our esteemed speakers and panelists. Before I do that, by way of a brief introduction of myself, so my name is Neeraj Maskara. I am with EY Singapore, and I'm the financial services lead partner for digital and emerging technologies. And I think the whole topic of cloud adoption becomes really front and center for the conversations that certainly I find myself having with every financial institution. I think it is unmistakably a key agenda item for every CIO, CTO, or other, if you like, strategic platform development or agenda. And whether, in terms of journey to cloud, on their rationalization and strategy layer, still trying to figure out how they want to actually adopt the cloud. Some of them who are in the process of migrating in chunks, and others who seem to be a little bit more ahead of this curve, now looking to optimize their cloud architecture for that matter. So certainly an exciting topic, and as Nicholas wonderfully laid the foundation with his presentation, the future does seem to be very cloud focused. So I think it's no surprise that we're all coming together for this topic. In terms of just introducing the panelists, I think Nicholas has already introduced himself. I'd love to invite two more panelists to join us for this discussion. And I'd request them to introduce themselves in a few words, if that's okay. So first and foremost, Arun Vivek Iyer, who is from Standard Chartered Bank, and he's the executive director and the head of cloud security. Arun, if you could please introduce yourself.
Arun, I think we can't hear you.
Is that better now?
Yes, thank you.
Okay. Hey, thanks, Neeraj. I think I've been with the bank for almost 6 years, and we started this journey about 6 years back when we were looking at a cloud journey as an initial stage. My role in the bank requires to head the cloud security engineering and architecture. So we looked at cloud predominantly in the early stages when Singapore or Southeast Asia was looking at the cloud as a entry technology in terms of emerging tech. So we have done a significant amount of movement of workloads in cloud, given the SaaS and also in the IR space. So roughly we have about a large set of material and non-material workloads in cloud at this moment. And of course, we have our own regulatory governance frameworks built on top of that to ensure the security and safety of these workloads are being taken care before they move the workloads into cloud.
All
Thanks,
right.
Neeraj.
Thank you, Arun. And our third panelist joining us is Edwin Teo from OCBC Bank. He is the head of governance and regulatory affairs and brings more of a cyber risk perspective to our discussion today. Edwin, a brief introduction for yourself, please.
Thanks, Neeraj. And also similar to Neeraj, thank you, ISACA and IBF, for the invitation to be part of the panelists. A bit about myself. My name is Edwin. So within the OCBC Bank, I head up the governance and regulatory affairs team. So it is a team within the broader function known as Tech Info and Cyber Risk. So essentially, this function is a second line of defense function under the group risk division within OC. So part of my responsibilities include, coming up, formulating, updating group-wide framework and policies in relation to the 3 risk domains, and some of it does cover or overlap into the cloud risk related to cloud as well. and as well as driving some of these risk committees to review the risk items pertaining to cloud as well as other areas, right, across these 3 domains, and including enabling upward reporting of risks to the senior management and the board. And of course, the other big aspect of my portfolio is really the regulatory-driven initiatives, which will, at the end state, is to enable the bank to meet some of these new or revised regulatory requirements that are issued by the MAS. For a bit about myself, I started my career as an IT audit consultant with E&Y, and then subsequently moved on to join the MAS as part of the tech risk supervision team, right? Again, mainly responsible for supervising banks, as well as helping in the formulation of regulatory guidelines. And before taking on various risk and compliance roles within regional and global banks. So that's pretty much about myself. Neeraj, over to you.
All right, thank you, Edwin. So once again, Nicholas, Arun, Edwin, thanks for joining us for this chat. Just before we get started, for the audience here, once again, as a reminder, please feel free to use the Q&A section, which is available on the panel, on the navigation panel, to post any questions throughout the panel discussion for any of the panelists. We will try and respond and take up as many of the questions as possible at the end of the panel discussion. So with that, maybe I would like to open up with a question to each of the panelists with your point of view. As a very general perspective from your end, I think, Arun, Edwin, you come from it directly from a practitioner and from the banking perspective, and Nicholas, certainly from a cloud service provider perspective. Just wanted to get your thoughts on how do you see cloud adoption by the financial institutions in Singapore specifically in the current environment. So maybe I'll start off with you, Edwin, if you don't mind sharing your thoughts first.
Sure. Thanks, Neeraj. So in terms of cloud adoption by FIs in general, I think this has generally increased, right, as compared to, let's say, 5 to 10 years back. And I believe this trend, this upward trend, will continue, all right, mainly due to 3 key reasons. I think first one is really on the regulator's stance. So far, MAS has been fairly clear and has reiterated over a couple of occasions that they do not prohibit the use of cloud by FIs. And not only that, they have also issued a public cloud adoption advisory recently in June, which sets out certain requirements or expectations on FIs prior to onboarding any cloud services. Right, so that's the first one, the regulator stance in Singapore. And then secondly, I think in terms of the benefits of cloud, most or even all FIs are aware, right, certain benefits which Nicholas has highlighted very succinctly in his earlier presentation, right, agility, scalability, operational efficiency, so on and so forth. So I think these benefits are especially relevant in the current climate where a number of FIs are embarking or are already in the midst of their digital transformation journey. So I think that is also one of the push factors in which FIs will be more encouraged to adopt cloud services. Now, the third point is really on the maturity of cloud service providers, CSPs in short. I think over the years, we have seen, at least based on what I've seen so far, many have progressively uplifted their control environment, their security posture, because they are fully aware that in order to work with FIs, they need to help or work together with the FIs to meet the regulatory expectations. Therefore, with that uplifting of the control environment, I think it makes it more palatable for FIs to also engage them for certain services, because they can then, in turn, FIs being ultimately responsible, can then in turn convince the regulators that we are taking the right step forward, at least as well as managing our risks.
Thanks, Nicholas. Thanks, Edwin. And I think with your last point around the cloud service provider, maybe that's a good segue to point to Nicholas. Nicholas, what are your thoughts in terms of how you see cloud adoption by the financial institutions in Singapore today?
Sure. Thanks, Neeraj. Yeah, I think building on Edwin, there's definitely more and more support now from the regulator and MAS to really help FI go into the cloud and be sure that they won't be penalized if they decide to do so. I've seen two things, again, being on the FI side as well as being part of Microsoft, that are still issues I see. So I think outside of really I was discussing the ventures and everything that's happening in the lab, still see a lot of FI still struggling to really establish a clear business case, which is really outcome driven, not just cost driven, but really outcome. What is the value to the customer you're going to be creating by moving this specific workload or this application into the cloud? And that's really something that is still quite a challenge for them, and therefore kind of blocking them into going faster into the cloud. I've seen as well, now joining Microsoft, other companies are still trying to sort everything out and validating and committing everything out before putting the first workload into the cloud. So that's what we usually call the analysis paralysis. And it's really an issue. And again, as I said, I think if I have to go progressively into the cloud, you configure everything at first. You have to go step by step. And again, you have to start with workload that are low impact, low customer, and then you just build on that. So I think that's what I noticed. On a positive note, I think on the adoption, I've really clearly noticed as well, and interestingly in Singapore as well as Southeast Asia, like some of the customers are now actively using the cloud as a clear differentiator for their customer. And it's really now for them, not just a way to save cost, but really a way to compete and create value for the customer. And I'm really happy with the mindset change from it's cheaper, then really it's actually now a way to compete and fend off potentially the competition. So that's the perspective and the good news.
Thanks for that, Nicholas. I mean, that certainly also points out some good practices coming from your perspective, right, in terms of those who are looking to get on the journey to the cloud. Arun, is there anything you'd like to add from your perspectives as you see the state of affairs?
I think, Neeraj, the journey when you look at cloud adoption in Southeast Asia begins with, because since we are a UK-based bank, and if you recollect, SEB is one of the biggest banks which have got a few many regulators to probably manage to. So we manage close to around 60 to 70 regulators. So apart from managing just MAS, PRA, we're going to be looking at other regulators like RBI, Pakistan, and other regulators where cloud is still an entry vector into the market, and it is seen as a differentiator, but I don't see the trust level increased in other markets. So Singapore is the best place. I have seen adoption rates have increased drastically. In the last 5 years, the maturity of the services, like how Nicholas and Edwin has pointed out, that the adoption rate has increased drastically from what I see. Earlier, when you go back to these forums, you talk about EC2 instances or S3 bucket. Those terminologies were very geek and Latin to people. Now it's quite common used lingo where people get relate back to, and they can probably appreciate what they currently are looking around. I also see a good article which was published recently around the CRI index, which was posted on my LinkedIn as well, which was specifically around the adoption rate of how people get to choose a region and where they intend to put their workloads in cloud. There are significant factors behind you deciding that because of social stability, because of financial stability and operational stability of what you see the region operates from. And how do you rank yourself as a location in terms of choosing a particular region for your cloud service provider? So those were very critical insights which you could probably look at when you're deciding to probably go and operate in a particular region. Your DR strategy and resilience strategy becomes key and vital. And these probably reports probably give you a clear idea to probably thought through and then probably decide it ahead of time.
Thanks, Arun. So, I mean, I guess hearing you and also I think part of what Edwin echoed, right, coming from the banking side of things, the trust seems to be an issue that seems to keep coming back time and time again. I think that's been a large part of the inertia over a period of time, right? Maybe I could turn to Nicholas then and just get his view on something, which is, in your position, speaking to a variety of different financial institutions in recent years and being one of the major cloud service providers, have you seen a change in thinking with regards to cloud adoption? And what have been some of those key changes, especially in response to that trust factor, which we are looking to try and get a little more confidence on from a lot of the players in the market?
Sure, Niraj. So the interesting change that I think Edwin and Aaron talked about as well is that I think now we are at the stage where the customer doesn't want to know why we should go in the cloud anymore. We had years of conferences and podcasts and consultants and analysts telling you why and the benefits. So I think this is behind. Now the question is how? How do we go there? And what I've seen in really the change is the expectation that the cloud provider as well is going to be part of the journey. So they really now expect the cloud provider to guide them through the compliance and the regulations. So we have many customers coming to us and say, you know, I have this workload, I need to be compliant with this and this regulator. How can you help me be compliant? So again, how can you provide me score? Can you provide me best practices? How can you help me do that? And not just, can you give me, you know, an EC2 instance at the cheapest price, but really accompanying at a higher level. So I think the discussion has changed. And that's in part as well because of all the cybersecurity issues that we had recently. So they come to us as well to get, you know, how can I improve my security posture? What kind of, you know, solution, SIEM, XDR, EDR solution you have to, you know, prevent ransomware. And really, I guess, because Microsoft as well as a cloud native SIEM solution, that's why they would come to us, but they're really worried and they're really actively trying to not just focus on how can I be compliant, which is one aspect, but the other one is how can I be secure? And again, to me, it's two different things. They might overlap in some way, but being secure doesn't mean being compliant, and the other way around as well. And finally, I think the thinking is changing a lot. What I've seen is based on zero trust, which is now a keyword that everybody is talking about, is getting a lot of attention. And it's a key driver as well for cloud adoption recently, because it's much easier to implement workloads, to report, to monitor, and to remediate incidents and issues in the cloud or even in hybrid mode when you actually leverage the power of the cloud. So that's really why as well there's been some changes in thinking around adoption and really speeding up the adoption.
Fair point, Nicholas. Thanks for that. And I suppose if you look at the market microstructure of financial service providers, small, medium, large across the buy side and sell side, right? There's obviously a lot of institutions that are looking to migrate to the cloud or at least rationalizing it right now. What in your view would be some of the key success factors that they would need to keep in mind, or you would suggest they should keep in mind while they're ramping up that journey to the cloud?
Yeah, that's a good question. I actually talked about it, I think earlier, really, as to me, the success factor is really for any project to move any, again, workload application to the cloud, you have to be running a business case and really make sure you create value. You have to be outcome driven. And I think that's really one of the key success factor to be able to judge the value of actually working in the cloud. But now every firm will actually have different weight on different factors. So some companies, and even within the FSI industry, some companies will really value, and their outcome is cost saving. Some is cost predictability. Some will have cost allocation capability as well. You can actually charge different division more precisely. Some just the flexibility. Some will work on, as was the case for my previous companies, on really the innovation capabilities, how you can create partnerships and expose API. Some for the pure scalability, because they really are the very seasonal workloads, so they want to be able to scale up and down and really use the power as efficiently as possible. And some on the technical, on the commercial scalability, which is the ability to roll out very easily across different markets as well, not just the key market they start from. So all these different factors, every company will have essentially different weight based on that, and that's what's going to make the business case. So it's really hard when you are a cloud provider to actually tell them, this is what are going to be your success factors. I think they have to define them. We can provide them with the key list of benefits and things they should be looking at, but ultimately it depends on the company, the maturity of the company, and what they are trying to achieve. What I always try to recommend is really try to look at always the risk and reward approach for the cloud, and really make sure you balance this when you try to create your success factor and really keeping that always in mind. And the last one, I think that is a key success factor, is when you try to avoid the whole all or nothing. So you have to have a mindset where it's perfectly okay and acceptable to actually run hybrid and have some workloads very sensitive, keep all your core data on-prem and have some other things running in the cloud. And again, so that you don't consider a key success factor as we moved everything into the cloud. Success can be, again, a hybrid solution, especially for quite a while. At some point, you may decide to move more and more into the cloud, but success could be having only some of them in the cloud.
Yep, no, makes sense. I mean, we do hear more and more the adoption of a hybrid as an interim approach, if not entirely migrating. And then too, some of the institutions seem to be having a multi-cloud strategy also evolving in the kitchen. So, well, maybe I could turn to Arun. Arun, you had mentioned that certainly from a standard chartered bank perspective, with global operations and fundamentally having to maintain oversight in the cloud program against multiple jurisdictions, multiple regulators. Wanted to get your thoughts with your experience in terms of what are some of the critical focus areas to consider when migrating material workloads to the cloud?
I think that's a very good question. Since you brought material workloads as a primary topic, Neeraj, I think the latest guideline from ABS probably identified a difference between what you call as material to what you don't call them as material. I think the guideline is ABS 2.0, which comes out and clearly states which are material workloads. They currently classify anything which is related to customer data, PCI, card data, or where you have sensitive data, which is required for the bank's core operation. They are rated as material applications. And for that, the preliminary requirements are to ensure you have necessary security controls baked in as part of the onboarding process to ensure adequate governance is placed in place to have these material workloads to be secured in a way it currently can be secured to what the requirements are from a regulatory point of view. So we did an internal exercise. I think the understanding is that our current governance forum within the bank, which is led by Anthony Hodge, we have found a forum which we clearly identify material workloads and non-material workloads ahead of the life cycle when we wanted to move workloads into cloud. And respectively, depending upon the workload's sensitive nature and their SBIA rating, which is your security business impact assessment rating, which gives you the impact of CIA for the given asset which is currently moving into cloud. And based on the sensitivity, we try and apply controls of how we secure the data which is going to be hosted on cloud. It also warrants that you, over a period of time, we have now got better in managing some of these controls. So which means you have to also do an external audit and a pen test and VAPT to be completed for all these critical applications before they move into cloud. And fundamental is because you're got an external vendor who's coming in to probably audit yourself. I think most of the time it is either you or PwC who will be in the audit force trying to audit the applications. They will take an independent view of a given application when they are migrating into cloud, challenge us in terms of our decisions of why we have chosen a certain particular application to be moving to cloud, and why did we choose a hybrid option, or why did we choose a particular data protection control over some HSM or a KMS capability, to cite you an example. And we don't go down to the nuts and bolts of whether these controls are relevant to the current context of the application, and whether that application, when it migrates to cloud, and it's probably having resilient chaos testing done to ensure in case there are any roadblocks when they go live, we still are able to operate in an environment natively in on-prem or in cloud or a multi-cloud environment. And those are the fundamentals behind which how we have designed judging non-material workload.
Okay, thanks, Arun. And perhaps, Edwin, if I could just turn to you and get your perspective on the regulatory climate, actually, since you are the head of governance and regulatory affairs at OCBC. Do you think that the regulatory climate is now easier for financial institutions to adopt cloud, given the recent advisory papers, which is providing guidance on cloud adoption? Or do you think that the bar is now set even higher, given the expectations that are outlined over there? Curious how you interpret that.
Thanks, Neeraj. I think that's a good question. I see this from two perspectives actually. So one, that recent public cloud advisory, right, which sets out certain requirements. I think it is good in the sense that it gives more clarity to financial institutions who wish to adopt cloud, right? What needs to be done? What are the various considerations, the rigor in terms of the due diligence needed, right? But at the same time, having that clarity would also mean that FIs will then need to potentially put in more resourcing efforts in order to meet those requirements before even moving into the cloud. Now, I suppose for a more mature FI where there is a team, right, dealing with such due diligence checks, engaging, whether is it cloud service providers or other outsourced service providers for such due diligence work, I think that's fine. But I think for the smaller outfit, I think that could pose a challenge. So I'm not sure whether on that front, you will say that it is easier to get into the cloud now, given the recent advisory that was issued. But I suppose whether the advisory is issued or not, what is key and has remained unchanged is the MAS's key message to all banks who wishes to adopt cloud, right? You're still responsible. You need to ensure proper governance and oversight is put in place, right, in order to manage your engagements with different CSPs. So no straight answer to your question, whether is it easy or not, Niraj, but I guess it depends on individual FIs and the level of maturity when it comes to cloud engagements.
That's a fair perspective, Edwin. I think it'll vary depending on where an institution is at, right? In terms of the level of maturity to interpret what's in those guidelines and how they can quickly adopt or roll those things out. But I suppose another question that follows from there, which I find very interesting in, as I think we all know, let's look at the core banking platforms, right? Which have inherently been very monolithic and heavily on-prem type of platforms out there. And there's been a heritage of years and years of those platforms that have survived various eras. But now these core banking platforms are available as cloud native and basically SaaS in nature. Do you think, in your view, that financial institutions or even MAS for that matter are going to have the appetite or the mindset to adopt critical banking applications that would be essentially cloud native?
Wow, kind of a tough question. Okay, maybe I break it down into two parts to probably make it a bit easier. I think from a regulatory perspective, maybe specifically for the MAS, I think all of us are well aware of their position, right? They do not prohibit the use of cloud. They also recognize the benefits to a certain extent, and they just have to make sure the banks are reminded to put in place the necessary checks and balances for such cloud engagements. Now, from a FI perspective, if you're talking about critical apps, I suppose you also need to be mindful that the more critical an application is, right? For instance, it could include a lot of personal or confidential information. It could be supporting a critical or essential service of the bank that is customer facing. I mean, the more critical an app is, if you were to put it to the cloud and touch wood, if something fails, MAS will still hold the bank accountable, right? Therefore, I think these are some of the considerations that I believe the seniors within different FIs will have to consider and take into account before making a decision on what sort of applications to move into the cloud, right? And I think criticality could be one of the consideration factors. As I've briefly shared earlier, I think compared to 5-10 years back, the cloud adoption may not be as high, right? In the past, in fact, it's very low. I think now we are seeing that upward trend. I think at this point in time, my take is banks will still remain fairly conservative, not so much of cloud adoption, but in terms of moving some of these critical applications into the cloud. And one of the key reasons my take would be they are very mindful of the possible higher risk impact to the institutions should this particular cloud app were to fail, be disrupted, or even worse still, breached, where information is lost. And I think as part of their cloud adoption journey, they will probably move or migrate some of these non-critical apps or things that are easier, right, to move into the cloud first. And once they are more mature in this cloud adoption journey, they are more clear or familiar with what's expected from both the regulators and what CSPs could offer. I think I wouldn't be surprised they decide to explore whether is it even possible to move some of these critical apps into the cloud. That would be my take in terms of what we see in the next 5 to 10 years.
Thanks, Edwin. I think that aligns also with what Phyllis outlined from his perspective, right? I think the general message is cautiously moving to the cloud, lesser mission critical applications first, observe the impact, make sure that the house is not burning, and then move to more mission critical applications, I think, right? But I think there's certainly an optimistic outlook in terms of the journey to the cloud as we go along. We're getting a lot of wonderful questions from the audience, so thank you for that, everyone. We'll try and get to that in a moment. I suppose I'll just ask one more question back to Arun, if that's okay, more on the technical side. So I appreciate a response for that in a couple of minutes might be tough, but would love to get at least a short view of yours from it. This whole thinking of security as a code, right? I mean, again, that's something that is really, really becoming prevalent. How important and relevant do you think is this security as a code thinking in the modern landscape of cloud enablement?
I think the question itself makes me talk for an hour. Given the topic which you have given me, Neeraj, I think it's more relevant topic for the hour, and I think probably some of the security practitioners may hate me for saying this, but gone are the days where you used to look at a traditional way of probably rubber stamping security in the books of records. When technically you have to go back to the security team for taking any attestation. They come back with a proper architecture document, and then you come back with a proper monolith document, which probably lays out all the controls and say the security guy goes through it and then stamps it to say yes, it is done. But I think that culture has changed over a period of 5 years. I've seen the first forerunner were Netflix and NBA or CBA and the ANZs of the world, which they probably adopted security as a code. I think majority of them are looking at security as code right now. And as we speak, more and more people are probably adopting this across the global landscape of FSIs. And when I say that, it means a security engineer who's working on a ground level with respect to the cloud program needs to start contributing security controls into the program, which means rather than sitting and defining the controls, you go back to the operational effect to design the controls which are relevant for the given cloud service provider against the threats what we see. Where threat modeling becomes more relevant, I think of late I've seen even AWS, and we have done a lot of exercise with them jointly to ensure all services we currently onboard within the bank goes through a proper amount of threat modeling. When I say threat modeling, we follow the NIST cybersecurity framework. We define a set of preventive, detective, and corrective controls to define what controls should be preventive, which could be configured as part of the baseline for a given account or a subscription, and what controls have to be detective as Splunk use cases in your SOAR or Phantom platforms, where you wanted to have detective use cases to detect particular use cases, and also have a remediation use case to probably go back and remediate if something absurd happens, because cloud is too fast. For you to even look at some breach happening, it's probably 10 minutes or 15 minutes gap, which he needs to upload a large chunk of data from your account. So you can't be very less reactive in terms of what you see as breach detection or even notification. So you need to be instantaneous. So you can't put human as an element of surprise if a breach happens and then put reaction on top of it. So you're going to be looking at ways where we can automate the reaction templates. I think there's a wonderful amount of open source work in AWS Labs and also Azure Labs, which I've seen for remediation work from Azure Security Center and also from Security Hub, where you can go back and remediate these workloads the moment an event gets triggered, be it where you wanted to have this event being sent to, and based on that event, what you want that state of the event should be. A classic example could be S3 bucket turning public, and you don't expect this to be happening at the middle of the night at unprecedented hours. So the moment you see that event happening in your current workload, people don't wait for this change to go back and remediate, because these are changes which might just clear in a period of time, and the exfiltration is happening fast. So you may need to quickly check why the state changed, and within a time of about 5 to 10 minutes, you have changed back the state based on what you currently have. And the controls are there currently to that maturity. I think a lot more banks have to probably think about it proactively rather than reactively when you're moving critical workloads into cloud, because being reactive is going to be taking a step back if you're going to looking at putting production critical workloads into cloud. And the data that is sensitive, I would recommend to start looking at tokenization and use cases of BIOK, BIOE to be critically one of the sensitive topics to be discussed upon. I think where we have not touched essentially is when you move critical data into cloud, securing that data to where it resides also makes an effort, because most of the cloud services, so-called, including Azure and AWS, when they ping the service, it's a global service. So you can't restrict them by region, like services like IAM, services like S3, services like Blob. These are global services. So when you look at global services, you can't restrict that service where you have data to be encrypted and tokenized. So you need ahead of time before you look at your cloud journey or migration journey. And that's where I fairly see threat model becomes quite relevant in the space. And I think there's a wonderful article in AWS blog post where you can look up for the threat modeling. We were the forerunners in Southeast Asia to probably do a threat modeling ahead of time for all the AWS services. And I would suggest before even you onboard a particular service into your landscape, I would suggest start doing the security work first, because the moment you onboard a critical service like Lambda, or you onboard a critical service like Route 53 or a VPC endpoint, you're going to look at multiple ways you're going to be connecting outside the bank, which means your earlier old way of connecting, going out the bank would be through a proxy, Blue Coat or Cisco, which would be sitting in your data centers. The moment you're introducing Route 53, VPC endpoint, or any touch endpoints or TGW to go out, you have already opened the door to multiple possibilities where the data can go out to. So you need to be a lot more stricter and a lot more careful around what you define as controls to ensure these gateways which you currently see are endpoints which can connect back are connecting to legitimate sources, because you can just generally connect any legitimate source of account which can be currently hosted in cloud, which means you need to have governance controls to ensure when you connect to a particular account, they are in your corporate network of accounts, which you currently manage and you currently are subscribed to. And you're only authorized to share this with only your corporate accounts.
Thanks, Arun. Thanks for pulling that together in just a few minutes. I know it's a very difficult topic to, just speak, especially without even having some visuals around it. But yeah, that's wonderful. And I hope you're prepared for all the incoming messages you're going to get from all the security engineers on this call now, who are going to want to hear a lot more from you and discuss the topic with you a lot more. So with that, I think we'll kind of just bring the Q&A between us to a close. Thank you, Nicholas, Arun, and Edwin, for responding to the questions that I raised. I think that was a very informative discussion we had. I'd like to now turn to the audience who have already posted a number of questions. Let's try and see how many we can get through. I'll just look to pick and choose a few and direct it to one of the panelists who might be best positioned to perhaps respond to it. By all means, if any of the other panelists feel they want to jump in or chime into that answer, please feel free to do so. I suppose the first question is to Nicholas, which is for financial institution clients using Microsoft Cloud Services, how does Microsoft support clients to meet their technology risk management requirements that are imposed by the regulator?
Yeah, so I think I mentioned that briefly earlier, but within Azure, we have what we call the Security Center. And within the Security Center, we actually have governance and compliance regulatory dashboard. So we analyze all the subscription, all your environment, and we actually give you a score about your compliance based on specific regulator or specific compliance needs. So for example, NIST, that I think Arun just mentioned as well, CIS, which is another one in US. We're now even working I think UK and then regulatory compliance needs are actually embedded in this. I'm sure MS will come at some point, so you will be able to log in, have your workloads and potentially your entire system, and essentially have a score that will give you the compliance that you may have with, MAS DRM, and then it's going to give you, okay, you have whatever 67%. Then you can zoom in, and it's going to give you recommendations as to what are the parts that you need to essentially modify to improve your security, so you can improve your compliance level. So these are tools that are built in within Azure platform.
Thanks, Nicholas. The next question from the audience, I'll just ask Arun if that's okay. So Arun, we've heard the cloud service provider's perspective on this. Wanted to get this from an FI's perspective, right? What are some of the key criteria for the financial institutions to select a cloud service provider?
Wow, that's a summer-long topic to cover, Neeraj. It wouldn't even take 5 to 10 minutes to even cover. I think, see, if you rightly put it, sorry, go ahead.
I was just saying maybe just a couple of them that would be on top of your mind, right? Some of the criteria.
So I think the fundamental choice becomes the use cases where you see coming from business. I think that's the predominant driver where you see coming towards, whether your workloads are coming to more containerized, innovation-driven landscape, like what Nicholas have highlighted before, or is it more towards functionless service or serverless environment where you wanted to look at running a serverless environment in place? Because majority of the people are looking at agility at scale, which means they want to go live in probably few weeks or few months from now, and they don't want to have a long period of development cycle for getting their application live. So given some of the key criteria, what I would look for is rating where your application business focuses, because right now to just compare what I've seen from Australia and here, I see business focus becomes a primary criteria, whether you're addressing a retail set of customers or you're addressing something from wealth management, private banking, commercial banking, or be it wholesale banking. So the need and the services required for addressing that need becomes a primary criteria for selecting that, followed by the regional resiliency. Because if your customer base is going to be at a location where your cloud services are predominantly based, because rolling out that services, I know for certain locations, Azure probably would have been a forerunner to probably go and establish a data center and bring up a region, where certain cases it would have been AWS or Ali Cloud, who would probably be a forerunner. And given the choice of the location could also be one of the reasons. And what services you need in that region will also be one of the driving factors. And the secondary and third would be the regulatory and compliance needs for a given regulator, because I think given MAS is in Southeast Asia or HKMA or followed by APRA in Australia, most of them are looking at a fairly straightforward standard of looking whether my services are all MAS APRA certified, or all the services currently going through the attestation from the cloud service provider. I think both, needless to say, both AWS and Azure have done enough amount of work in the compliance space. I have seen both of their work. They're relatively good in the space. But when it comes to very specific needs, okay, you may need as an entity which you're evaluating a cloud service provider, you may have a requirement to probably be very more stringent in what data goes out and what data resides within the organization. So when you decide a CSP, look for those detective controls which are natively required for you to ensure your data is currently protected at a given point of time with whatever native services they have. Because I think predominantly most of them have their own set of services like guard duty in AWS, or be it the advanced defender in Azure. All services currently give you some level of capability understanding, but you need to go back and decide that what level of security you need for the given services, given the regional landscape where they are. I think these are the fundamentals I would go and choose if I'm evaluating a service provider. I would suggest probably to also again take back and look at the CRI index score, because they've got a lot of meaningful results which they've done in terms of giving you various perspective when you decide a CSP. It's not just their services, it's not about what their rapid growth is in terms of adoption rate. They've also taken the region as a dependency, because when you're looking at Southeast Asia, India, Australia, New Zealand, or Europe, or UK, you will be looking at what regions are where and which providers are probably doing well in that given area. So when you're looking at that, that becomes also one of the predominant driving factors, along with how much revenue you can generate in that particular region.
Thanks, Aaron. Clearly, I mean, after the business case is established, it seems like protection, security, compliance, data protection would be some of the key criteria from what you're actually saying, right? In being able to choose. So that's great. Edwin, for the next question, if I could just maybe turn to you. The question from the audience is that, well, cloud is now widely accepted by and large, and risk and assurance activities will surely transform along the way. What is the next big thing in terms of moving up the maturity curve for risk and assurance across all three lines of defense? And would love to get your view of that, both from an FSI's perspective, and then maybe after that, Nicholas, if you'd like to chip in, then also from a cloud service provider's perspective.
Okay. Well, again, probably also another tough question. So I guess from a FSI perspective, in general, if the expectation is that, with cloud adoption, and if there is a need, not if, there is a need to do more due diligence work, right, on the bank's front to make sure we are comfortable, right, with the engagement of certain CSPs and their control environment are in line with what we ourselves implement, that additional duty may require, again, to my first point earlier, potentially more resourcing, more effort needed in order to perform such duty before the CSPs are engaged. Now, what I think may be the moving forward trend is that given the need to perform more and more of such due diligence pre-onboarding, right, there could be a potentially hybrid model that may be adopted by some of these bigger FIs, whereby they may not, for example, they could be doing their own due diligence work at this juncture. Now, if the volume increases exponentially, then they may possibly explore a hybrid model with a, for example, a security consultant, right, where they can then try to agree on what is the operating model from a risk-based approach. So, for example, for more critical engagements where more data could be involved, services could be more essential, then a deep dive of the security environment of the CSPs could happen. Whereas maybe for the not so critical ones, based on their internal FI's classification, then maybe a light touch could be the way to go, right? I think ultimately, we need to take a risk-based approach so that we don't end up boiling the ocean unnecessarily, but still at the same time, able to manage the expectations that is imposed by the MAS, right? I think that is probably one possible model that FIs may move towards, right, as we see more and more of such cloud adoption. I think secondly, in terms of the collaboration between the three lines of defense, for sure, the first and second line now are working together, right, to make sure we are, as a bank, we are comfortable, right, to engage any cloud service providers, and we are able to satisfactorily demonstrate as such when we're being audited. But having said that, I think it may make sense for the internal auditors of the bank to be involved, right? May not be an approval, but probably more from an observer standpoint, because they still need to maintain their independence. Involved upfront to highlight some of the pitfalls, right, that banks should be concerned with and address, or even giving some advice in terms of what needs to be looked at in addition to what we are doing already, so that we can then minimize some of these gaps or loopholes that could potentially surface sometime down the road post onboarding of such CSPs. I think generally these are my take in terms of how the FIs will evolve, right, as we see more and more of such adoption of cloud.
Okay, thanks, Edwin. I mean, I think we're soon coming to the end of the time that we had allocated for this webinar. So, Nicholas, I don't think there's a lot of time to get your view as a CSP, but certainly if you have, a few views that you could share with us quickly, that would be very much appreciated on this.
Yeah, actually, I have just one comment on how you would select your provider quickly.
Okay.
Just two things that were not discussed, which again is completely neutral. And there is indeed the architecture and data residence and all the things that I would highlight, which are really important. But I think we have to start as well to look at the cloud provider, again, not just as a set of features and essentially tools and function you could use. And I think the two key things that I see are driving right now is what is the industry expertise that your cloud provider has? Which country you're in, what is their expertise in this specific industry? How can they relate to you? And the second one is what are the professional services that they offer as well? So you want to work with them. How can they help you along the journey? Do they have a team? How big is the team? Have they done that before? Because again, it's hard sometimes. Most of the companies don't have enough resources internally to actually get into the cloud. So being supported, either a hands-on keyboard or really advisory, how can they help you in this journey? Because they know better, obviously, their platform because they are the one who are actually managing it. So that's two criteria, regardless of the provider, that I think now is quite important.
Yeah. Anything else you'd like to add?
No, I think that's it. That's
Thanks, Nicholas. So with that, I think we'll come to the close of the panel right now. And I'd like to really thank Nicholas, yourself, Arun, Edwin, for sharing your valuable insights and perspectives on this topic. And I also want to really thank the audience who have posed some very interesting questions to the panel, some rather difficult ones at times. And thank you for being so engaged as well. With that, maybe I'll just hand over now back to Karen.
Thank you very much. And we are running for time, but very quickly, I'd like to give you a bit of introduction of ISACA, who has organized this event together with IBF. We are a global nonprofit professional association focused on topics like governance, security, data privacy, and technology at large. I think before people start dropping off, I think it's what I wanted to highlight is on the next slide. As part of the certificate programs that we have, we do have a certificate of cloud auditing knowledge that is available for you to actually take up. This is a certificate program that has been created in partnership with the Cloud Security Alliance as well. Right. A lot of you may also know ISACA because of the certifications that the industry the industry seeks. That is actually on the next page. And again, there is the QR code there. If you want to find out more on what certifications you can take up, feel free to go to the website and explore further. But apart from that, if you would like to find out more about our events, we have got monthly webinars and events almost on a monthly basis. We just finished our annual flagship GTEx event last week. But if you would like to stay connected and learn more about the upcoming events, please feel free to follow us on social media. With that, thank you very much for joining. Florence, would you like to close, please?
Okay, thank you so much, speakers, for sharing your insights. And we have now come to the end of today's session. For those of you who dialed in via phone, do email us at events@ibf.org.sg to let us know the number you dialed in from so that we can send you the certificate of attendance. This COA will be sent to all participants to your registered email within 5 working days. Thank you once again for joining us, and a big thank you to our speakers. Till the next session. Goodbye for now.